Welcome back, everyone. Replacing your income with a passive stream of dividends is probably the biggest appeal to dividend investing. And in my opinion, SCHD has been one of the best dividend funds to invest in if you're on this journey. Investing in SCHD isn't the fastest way to replace your income with dividends. It can't really compete with some of the covered call ETFs that attract investors with their sky-high dividend yields. But SCHD has two major benefits that most of these other funds do not. The first is that SCHD has rocked a very attractive total return since its inception 12 years ago, that has been competitive with the overall stock market return. Not many other dividend-focused funds can say the same. The other major benefit of SCHD is that it has increased its dividend payouts at an above-average rate compared to the majority of other dividend funds. Let me tell you why these two benefits are important, and why you shouldn't overlook them in your strategy. Let's talk about dividend growth first. Dividend growth is a staple of any dividend strategy. You need your dividend income to continue growing at a rate faster than inflation if your goal is income replacement. Typically, as you seek higher yields, the trade-off is lower organic dividend growth. What do I mean by organic dividend growth? I'm talking about the dividend growth that comes from the underlying asset itself, and not through your contributions or dividend reinvestment. When you retire and start using your dividend income, you are likely to stop contributing to your portfolio and turn off your dividend reinvestment plan. Therefore, the sole driver of dividend growth from that point on will come from the underlying assets you own in your portfolio. What's the appeal of reaching income replacement faster if that dividend income stream won't keep up pace with inflation, in turn leaving you in a situation where your budget is constantly getting squeezed? Your goal should be to maintain a healthy dividend growth rate, at least a few percentage points above average long-term inflation. This will give you financial flexibility to cover unexpected expenses or splurge if you so desire. Since 2012, SCHD has rocked a very cool dividend growth rate of 11.41%, well above what most other dividend funds have been able to sustain during the last decade. The second benefit SCHD has over its higher yielding dividend cousins is that it has a very strong track record of generating a competitive total return. Since 2011, SCHD has grown at a time-weighted rate of return of 12.76%. I know what you might say. The last 12 years have been an exceptionally good time in the stock market. Yes, they have, but not all dividend funds have been able to participate in this upside as much as SCHD was able to. Aside from the past year, SCHD has remained very much in line with the total return of the S&P 500, a feat that many professional investment managers can't match. But if we are focused on income replacement, why should we care about total returns? Because if you don't, then you're essentially leaving money on the table. I, for one, would like to see the value of my portfolio grow over time and create generational wealth I can someday pass on to my children to make their life a little bit easier. Replacing your income with dividends should not be your only goal. You should aim a little higher and build wealth alongside replacing your income. Let me explain it better through an example. Let's say we have two people, Sam and Sally. They both retire at the beginning of 2014, and they each have a nest egg of $1 million to fund their retirement. Sam is very focused on a high cash flow and maximizing his retirement income, so he puts the entire $1 million into QYLD because it pays a 10% dividend yield. Sally, on the other hand, is more focused on growing her nest egg while also generating enough passive cash flow to sustain her needs, so she decides to put her entire $1 million into SCHD because of its high dividend growth potential. Who do you think ended up doing better between 2014 and today? Well, it depends on your definition of better. If your goal was to maximize your cash flow, then Sam clearly won. QYLD would have paid him between $80,000 and $110,000 in passive dividends each year, for a total of a little more than $915,000 in passive dividend income. Not bad in the span of a decade. Sally's dividend income started at around $30,000 per year, but each year it grew by a decent amount, culminating at a little more than $72,000 in 2023. Sally's total dividend income since 2014 would have been approximately $475,000, or a little bit more than half of Sam's total dividend income. From a pure cash flow perspective, Sam was the clear winner. However, if we look at the value of Sam and Sally's portfolios, there is a noticeable difference. Sam's original $1 million position in QYLD would be worth about $698,000 at the beginning of 2024, so he's actually lost about $300,000 during the last 10 years. Meanwhile, Sally's original $1 million position in SCHD would be worth a little more than $2 million today, so her portfolio would have doubled in value during this decade. From a net value perspective, Sally is the clear winner, as the sum of her dividend income and portfolio value exceeds Sam's. What's also interesting in this example is that in 2023, both Sam and Sally received a very similar amount of dividend income, $72,500 for Sally, and $79,900 for Sam. If we had a few more years of data, I bet Sally would surpass Sam in the amount of dividend income she receives annually. Sure, you can play around with this data and have Sam reinvest some of his high cash flow from QILD each year to prop up his portfolio value and generate even more dividend income. But is that really something you'd like to be doing in retirement? Passive income starts to become much less passive if you have to constantly keep working at it. SCHD was launched on October 20th, 2011, so the fund has been around for a little bit longer than 12 years, and something very neat would have happened today had you invested in the fund since inception. If you started investing an equal sum of money each month into SCHD since 2011, in 2024, a mere 12 years later, this portfolio would pay you back the equivalent of your contribution in the form of passive dividends. So if you invested $1,000 each month into SCHD for the last 12 years, in 2024, you could expect to receive $1,000 in passive dividend income from the fund each month. SCHD pays a quarterly dividend, so you wouldn't actually receive $1,000 each month in dividends. You'd receive about $3,000 each quarter, or about $12,000 during the entire year. This math works out the same regardless of the amount you would have invested into SCHD, provided that amount was consistent from month to month. I built a little calculator in Google Sheets to let you play around with these numbers. The file is free, and there's a link to download it in the description below. All you need to do is type in your initial investment into the fund and your monthly contribution in the top section here. Then the tables and charts below will automatically populate, showing you exactly what this journey with SCHD would have looked like. Tools like this can be very motivational. You can think about things you've wasted money on in the past, like feeding a bad habit. Type in the amount you've spent for the last 12 years, and see exactly how much you could have invested in SCHD today had you opted to do so instead. Looking back at the past is fun, but I bet more of you are interested in the future than the past that you cannot change. Fear not, there is a future SCHD calculator in this spreadsheet as well. In this calculator, in addition to the initial investment and the monthly contribution, you can also play around with the total return and dividend yield you believe SCHD can attain going forward. The 12.76% CAGR we have seen during the last 12 years may not be a realistic return we should expect from SCHD over the next decade or two. The long-term stock market return has typically hovered between 7 and 10%, not factoring in inflation. I think it's reasonable to assume SCHD could perform in line with the long-term future stock market return. My guess would be somewhere in the range of an 8.5% total return over the next few decades. The yield today is right around 3.4%, but that is also historically high for SCHD. During the last 12 years, the average yield paid by the fund is closer to a flat 3%. You can choose whatever parameters you'd like and see how the results change. The calculator shows you the outcome for the next 30 years. You can see the annual dividend income, the ending market value, the total amount you would have contributed after each year, the gain or loss, the total amount of dividends received after each year, and the projected monthly dividend income stream. Bear in mind that this is just an estimate, and the results will be as accurate as you were able to predict the actual long-term return of SCHD. This calculator also does not include any taxes that may arise from the dividend income or capital gains. Hopefully you enjoyed the spreadsheet and you found this video insightful. If you did, please do me a huge favor and give this video a like and subscribe to the channel. Thank you for joining me today and see you next time.